Indian Share Market Outlook for May 6, 2024. Share Market Outlook India. Point 1. Kotak Bank Q4 Preview, Loan growth to aid net interest income, lower margins may hit profit. Kotak Mahindra Bank's NII is expected to increase by 20 in Q4 FY24, while profit may slip by 6% YoY to Rs 3,283 crore. Strong loan growth is likely to help Kotak Mahindra Bank clock double-digit rise in net interest income in the Q4 FY24, but higher cost of funds and shrinks. The private sector lender will announce its Q4 results on May 4. The stock was recently in focus after the Reserve Bank of India barred the lender from issuing new credit cards, citing efficiencies and non-compliance. Additionally, the sudden resignation of senior leader KV talent pool. So far this year, Kotak Bank shares have crashed over 18%, underperforming 4% rise in the benchmark Nifty 50 index during the same period. Share Market Outlook India. Point 2. Weekly Tactical Picks. AMI Hotels, why it's worth an all-owned portfolio of about 4,800 rooms will be a big beneficiary of the hotel industry upcycle. With the strengthening of balance sheet and healthy growth prospects, we expect SAMI's valuations to re-rate. Share Market Outlook India. Point 3. Mutual Fund. The benchmark index in the past 3 years. Some of the top-performing dynamic asset allocation funds which managed to beat the benchmark index include HDFC Balanced Advantage Fund, Bank of India BAF and Baroda BNP Paribas BAF. The top-performing dynamic asset offered an annualized return of 25.90% in the past 3 years. When investors make a decision to invest in a mutual fund scheme, they weigh a number of factors ranging from the historical returns to the fund house's reputation, and overall market scenario to the future outlook. Factor in is the performance of the mutual fund scheme in the recent past. Here, we discuss some schemes of a mutual fund category dynamic asset allocation which have given good returns, i.e., better than that of their corresponding benchmark index. Also read, a monthly SIP of 1 grown to 90 lakh. A benchmark index is a standard against which a mutual fund scheme's performance is measured. Beating the benchmark index is an indication of the scheme's good performance. At the outset, let us understand what exactly are dynamic asset allocation funds. These mutual funds, also known as balanced advantage funds, refer to investment instruments, which invest in equity debt instruments that are managed dynamically 0 to 100% in equity and equity-related instruments and similar proportion in debt instruments at the same time, as per the SEBI's category. These are some of the top-performing dynamic asset allocation funds, which have managed to beat the benchmark index. As we can see in the table below, the top-performing scheme HDFC Balanced Advantage Fund delivered an annualized return of 25.90% in the past 3 years. Bank of India Balanced Advantage Fund which gave a CAGR return of 15.12%. This is followed by Baroda BNP Paribas Balanced Advantage Fund which gave a return of 14.50%. Other schemes which delivered an annualized return higher than 12% include 5%, Nippon India Balanced Advantage Fund 13.33%, ICICI Prudential Balanced Advantage Fund 13.49% and Edelweiss Balanced Advantage Fund 13.98%. Needless to say, the past returns of a mutual fund scheme just like a stock. In other words, if a scheme has delivered a good performance in the past, it doesn't mean that it will continue to give similar returns in the near future as well. Markets are volatile, and so are the returns. Note, this story is for informational purposes only. Please speak to any investment-related decision. Share Market Outlook India. Point 4. Dabur reinvests margin gains in advertising. Will it fuel growth? It was the stellar performance of home and personal care HPC segment with 8.7% growth that helped overcome the lackluster performance of other. Higher sales, material costs stayed flat, enabling expansion in gross margin to 48.6%. A bulk of it has been reinvested in brand building. Consumer goods company Dabur India Ltd's stock price peaked at 659 in September 2021 following Q1 FY22, during which it clocked 34% volume growth year-on-year. Share market outlook India. 5. Marriott sharpens focus on India, its fourth largest market, with 12 hotel openings in 2024. The hospitality chain is betting big. Occupancy and room rates are tracking strong. The company is also tapping into the growing market of spiritual tourism, with destinations like Ayodhya in focus. India is the fourth largest market for U.S. hospitality chain Marriott, and the effort is to bring it into the top 3. The company, which has opened its 150th hotel in Katra, Jammu and Kashmir, has a target of 250 hotels, including hotels which will be opened as well as those in the pipeline by 2025. We are opening 12 hotels in India this year, and, more or less, we had a record signing in 2023 and Q1 of 2024. We are flooded with queries from people who want us to open hotels, said Ranju Alex, Area Vice President, South Asia, Marriott International. The hotel chain's RevPAR estimate how well they are generating revenue from their rooms, in 2022 to 2023, was over 30%. In Q1 2024, RevPAR growth is between 12 to 13%. Share market outlook India. 6. Remedium 1:5 stock split. Remedium Lifecare bonus shares. If declared, this will be the second bonus share announcement by the small-cap company in less than 1 year. Remedium Lifecare stock split history. In February 2024, the small-cap stock TARD-X split in 2024, Remedium Lifecare shares had TRAD-X split in a 1:2 ratio. Sign INH bonus shares 2024, after trading X split on February 23, 2024, in a 1:5 ratio, the board of directors of Remedium shares this month. The small-cap company has informed the Indian stock market's exchanges about the development. The company said that the board will discuss the bonus shares proposal in its upcoming board meeting on May 10, 2024. The board meeting will also consider and approve the company's finance. If the company board authorizes the issuance of bonus shares, this will be the second bonus share declaration by this company in less than a year. The small-cap stock had traded X bonus in September 2023. Share market outlook India. 7. Coal India says demand will target to produce 838 million tons amount of coal in the financial year 2024-25, of which 661 MT will be supplied to the power sector alone. In April 2024, Coal India achieved production of 61.78 MT provisional compared to the same period last year when it was 57.57 MT. Coal India expects demand for coal to remain robust across all sectors as India's peak electricity demand is likely to touch 256.5 GW in 2024 from a record 243 GW in target to produce 838 million tons amount of coal in the financial year 2024-25, of which 661 MT will be supplied to the power sector alone, the state-owned company's chairman and managing director CMD PM Prasad had said in February 2024. 150 MT. But currently, there are huge coal stocks at thermal power plants TPPs, because of which the ministry has revised our production target to 838 MT for FY25. That said, if the power demand increases substantially, Coal India would, Prasad said in a post-earnings conference call for the third quarter of FY24. Share market outlook India. 8. Britannia Q4 results preview. PAT may decline 3% as rural demand fails to see substantial recovery. Britannia Industries business volumes in JITs, according to experts. Britannia Industries share price gained around 6% over the past 6 months. Marie Gold biscuits maker Britannia Industries is poised to report subdued Q4 earnings as muted rural demand and slower FMCG volume growth heightened the pricing pressures during expected to fall almost 3% year-on-year to Rs 542 crore from Rs 558 crore in the same quarter previous year, according to a money control poll of 10 brokerages. The bourbon biscuit distributor will see top-line growth of around 2.4% to Rs 4,000 up from Rs 4,023 crore during the March quarter of the previous fiscal. The EBITDA margin will correct by 80 bps YoY to 19.1%, according to the poll. Share market outlook India. 9. Sovereign gold bonds, prior due to heavy discounts. You can buy older sovereign gold bonds at slightly cheaper rates than the prevailing gold prices. But it's not always an easy decision. While gold may not be enticing enough for new investors, it is still advisable to have some allocation to the yellow metal in long-term portfolio in gold, like buying physical gold, exchange-traded funds, ETFs and funds. The cleanest, tax-efficient way is probably buying sovereign gold bonds or SGBs. SGB is the only gold-denominated instrument that not only allows you to participate in gold's price appreciation but also provides an additional income. And the best part is that if you hold these bonds till maturity, the returns from capital gains are entirely tax-free. Now there are 2 ways to invest in SGBs. One is to buy directly from the Reserve Bank of India (RBI) during primary issuance. The RBI year, which one can buy. The other option is to purchase older SGB issues which are available in the secondary market. Share market outlook India. 11. Titan Q4 results preview. Jewelry segment to fuel revenue growth. Retail footprint expands. As the improved wedding segment performance is set to drive performance. Despite gold prices surging over the quarter ended March 2024, late Rakesh Yunwala-backed multi-bagger Titan is poised to record double-digit revenue growth in the quarter on an annual basis. According to a poll, Titan's revenue will grow by 11.4% year-on-year to Rs 11,054 crore. The bottom line is likely to rise 10.5% year-on-year at Rs 811 crore, up from Rs 734 crore in the same quarter of FY23. Basis points on an annual basis. Share market outlook India. 14. Indgene IPO opens. Public issue subscribed 1.67 times on day 1, NII's lead bidding. Indgene Ltd IPO, which opened for subscription today, has 1,842 crore. IPO is a mix of fresh issue and offer for sale by existing shareholders. The price band for the issue is Rs 430 to 452 per share. Indgene IPO opened for subscription on May 6. Was subscribed 1.67. Investors bid for 4.81 crore equity shares against the total issue size of 2.88 crore shares. Stock exchange data showed. Non-institutional investors were at forefront of bidding, buying 4.14 times of the reserved portion. Retail investors purchased 1.5. The employee portion was bought 1.31 times. Meanwhile, QIBs or qualified institutional buyers were yet to warm to the issue, subscribing a marginal 5% of their reserved portion. Share market outlook India. 15. Blue summer. Revenues jump, operating margins expand but PAT DIPs surpass expectation amid hot summer. Share market outlook India. 16. IIFL Finance facing liquidity crunch after gold loan business curbs, could see Rs 5 early March. RBI ordered IIFL Finance to stop sanctioning, dispersing, and selling gold loans. IIFL Finance is facing a liquidity crunch as banks have turned cautious while lending to it following a clampdown on the non-bank lenders' gold loan business. A senior official and two bankers' two lines of credit nor disbursing from already sanctioned limits, the official at the company, who did not want to be named, said. Banks have stopped lending to IIFL Finance's gold and other businesses, the official said, adding that the impact of the curbs on the overall business is likely to be around. IIFL Finance did not immediately respond to a Reuters email seeking comment.